A very good morning and welcome to all our viewers who've tuned in live to this broadcast here on Moneycontrol. You're watching Opening Bell with me, Stacy Pereira. And well, after that big drubbing that we saw yesterday, we might find some respite, at least what the GIFT Nifty is indicating at this point. We're also seeing the Wall Street futures as well as the other Asian markets that have been quite propped up, we could say, this morning. So should we be waiting on the sidelines, or should you wait for a further dip to be entering the market? And what will be that good strategy that you should adopt in this kind of an environment? Of course, there are a whole host of macro cues that you need to be tracking as well. You have the RBI MPC that kicks off today, which, we'll get to know whether the interest rate decision by August 8th. So that is something that we'll be watching out for. And that will give us some cues as to which stocks that you should be picking in this kind of market. And of course, the Q1 earnings that are in the, in the midst of. So all of that is what we're going to be discussing in just a bit with our experts, and of course all of your queries, so keep them coming in. And of course, let me also apologize here for that little audio blip that we had yesterday. So we will try and take that all of your queries with our experts, but before all of that, let me take you through all the top headlines. Now, US stocks has ended quite sharply lower as the global equities continue to see that meltdown. Yesterday, we did see the Dow Jones tumble over 1,000 points, while the S&P 500 and the Nasdaq ended with about 3% cuts on the back of US recession worries, which pretty much shook all of global markets and driving investors out of those risky assets. But if you look at futures this morning, they are indicating a sharp rebound, and that's what we are seeing across trade. Asian markets have rebounded sharply and they've opened also in the positive. Japan's Nikkei as well as the broad-based Topix index has climbed more than 10% this morning. The GIFT Nifty is also indicating a gap-up open with over 200 points for the Indian equity markets. On the commodity front, you're seeing Brent crude hover near that $76 a barrel, hitting its lowest level since January amidst recession fears. Of course, gold too has fallen by about 1% owing to that wider global market sell-off. And the Reserve Bank of India starts its two-day monetary policy meeting, which begins, and the interest rate decision will be announced on the 8th of August. The central bank is expected to maintain that status quo on interest rates. Like I was telling you, the morning trade seems quite different from where we left off yesterday. Global markets are seeing that kind of rebound. You're seeing Wall Street futures that are trading higher. The GIFT Nifty too is indicating that gap up start about 200 points is what we're hoping to see the Nifty perhaps get back towards that 24,300 odd levels if we can. But yesterday we did see all 13 sectoral indices closing in the red. It was the metal pack, realty and the likes which were the worst hit, we could say. And of course the volatility index, that one has been seeing some big swings yesterday. Biggest jump since 2015, almost at a 9-year high, we could say, crossing that 20 levels even. So that is something that is quite interesting. But if you look at the futures and options and how one should be taking cues from there, the put call ratio for the Nifty, that one has fallen to 0.72 from the 0.91 that it was in the previous session. Now remember, when the ratio falls below 0.7 and moves towards that 0.5 level, it does indicate that there is more selling happening in the calls, which is higher than the sell happening in the puts, which could in fact go on to reflect that bearish mood in the markets. But right now we are propped up at that 0.7 levels. So if you have to take some cues for your F&O bets, that would be something you need to be watching out for. In terms of stocks that are in your F&O ban list, well, the NSE has gone on to add Hindustan Copper this time around in today's F&O ban, whereas it is retaining Aditya Birla Capital, Birlasoft, Chambal Fertilizers, GNFC, Granules India, India Cement, India Mart and India Mesh, as well as RBL Bank. So none of the stocks, those were there previously, have been removed from the F&O ban list. So a total of about 9 stocks continue to remain in your F&O ban. In terms of the fund flows, now yesterday, of course, we did see that big sell-off, but it was the FIIs that went flocking out, we could say, selling to quite an extent. About 10,073 crore worth of equities is what we saw get out of the system, especially from the FII side, whereas the DIIs did try to compensate, but of course it didn't match up to that levels. But a good 9,156 crore rupees is what we saw buying that came in from the DIIs. Perhaps always that opportunity to say, if it does buy on dips, be that strategy, and which is where you can perhaps try and come in, and that's where we're seeing most of your domestic or retail investors take opportunity. But like I was mentioning, the India VIX, so the volatility index, that one surged by about 42.23%, around that 20.37 levels versus the 14.32 levels it was the previous day. So that pretty much says quite a bit. At one point in yesterday's trade, it also rose as much as 52% intraday. That was being the highest in 9 years, we could say, of 2015 was when it was at those kind of levels that it saw in one day. But we also have a whole host of stocks that will be reacting to their numbers as well as putting out their earnings. So in today's earnings, you're going to see the likes of a Shree Cement, Tata Power, Lupin, PB Fintech, as well as TVS Motors, Vedanta from the metal pack, which will be putting out their Q1 numbers. So all of those stocks will be important to be looking out for. Well, let's get discussing what kind of strategies we can adopt then, and which stocks will actually make it, whether the defensive now are really being that outlier and one should be looking in that direction, or whether we could be surprised by the RBI and it doesn't maintain status quo, and then your rate sensitives again become much more interesting. Let's get discussing that, and joining me now is Brijesh Ail. He's the research analyst at IDBI Capital. Good morning, Brijesh. Always a pleasure to have you with us. Now, it's interesting what we are seeing, global markets do. Of course, it did give us those jitters yesterday and even on Friday, where we left off, quite with some bit of losses. But now we are seeing that kind of rebound. So is this, is it enough meat to be, sticking to this story, saying that we will come back from here, or those 24,500 levels are also something that we can achieve for the Nifty specifically? What are the levels that you are tracking?
Yeah, hi, morning. So yeah, yesterday we saw that there was a good amount of selling in the market, and we didn't expected the market to correct so much. Eventually, before the week would start, we always believed that 24,200 was the demand zone where market would always take support. But then with yesterday's panic, it broke, and then however the closing basis, the market respected the 24,000 level. So my understanding for the Nifty specifically for this week is that we have seen some amount of selling, and yesterday the low was precisely somewhere close to the 50-day moving average, which is 23,850 mark. So for the time being, that level has been respected. I believe there will be some bounce. With today, whatever we are seeing the gap up trade, so there would be a slight bounce back is expected. 24,500 would be the resistance on the way up. So one has to clearly watch this level, because again at 24,500, there are a lot of call writers who are aggressively made their position. So that level is going to act as a resistance. So the trigger would be 24,500 on a closing basis. By any chance, if there is a good recovery and we see a close about 24,500, then this extension of the move can be seen toward the 25,000 level. Net, the monthly structure has turned slightly negative. There has been distribution in the monthly time frame. So I believe for at least this month, we'll not be seeing any new top being made. So whatever the top has been made will be there at least for this month. At least this, I'm pretty sure for at least the next 10-15 days, this top will be registered. And there is a chance that Nifty might see again some selling pressure at higher levels. So one has to be cautious in the market. VIX, which was yesterday we saw almost 42% up. The trigger for the VIX is the 13-14 level. So until and unless VIX doesn't settle between 13 and 14, I think the market will be volatile, and on a bounce, we should be having a we should reduce our trading positions, and positional bets can be kept long, but trading upon wherever the clients have made their long positions from the trading perspective, they should take the exit call.
Right, so you can take an exit call wherever you get that. But Brijesh, what about the bank Nifty? Now, this one also has been quite interesting, going below that 50,000 levels and then seeing those kind of swings. What are the levels that one should track for the bank Nifty specifically, and also components within this? Like, we did have SBI earnings, so you saw some kind of reaction to that particular stock, but then you also saw the likes of an HDFC Bank, which just had started performing to then again, retreat and be among those top losers in trade. So how is one looking at the components of the bank Nifty and also the bank Nifty as an index?
So see, the Bank Nifty was always a weak counter. Even though when the Nifty was making a new high, the Bank Nifty never made the new high. So eventually, with the global pressure, the Bank Nifty is also corrected. The good thing with the Bank Nifty is it has come somewhere close to the demand zone of 50,000 level, where a lot of put writers are active, and that is also the 50% mark of its recent rally. So I believe yesterday's low, what we I think that. No, 49,719, that is going to be respected. There are many stocks which have now come to the demand zone. Axis Bank, HDFC Bank, ICICI. Even I feel these stocks are going to see some good amount of long built up at this current level. So I believe Bank Nifty might respect 50,000 level for the next couple of days.
Right. In fact,
Yep.
Brijesh, let's ask you to hold your thought, because we are there at market open and we are seeing that gap up start that we were hoping about, 330 points there on the Nifty, above that 24,200 levels, as you can see there on your screens. The Bank Nifty also good, almost close to 400 points that you're seeing on the Bank Nifty as well. So 50,400 levels is what you're looking for the Bank Nifty. The Sensex also managing to, good 700 or, more over 700 points, we would say, for the Sensex there as well. So almost 1.5% of gains, 1.2% of gains for the Sensex as well as the Nifty. So good 1% is what we are seeing right at opening bell. Most of the benchmarks at least seeing that kind of traction. In fact, even the mid cap and small cap index also seeing a good rally. In fact, Nifty mid cap, you can say almost 2% there of gains coming in for the Nifty mid cap index. So that one also quite good, nicely propped up, because those are the ones that also see the deepest cuts when this kind of sell off happens. We saw the mid cap index about 3% down. The small cap index was down by more than 4%, and now you're seeing those gains come back. So a solid 1,000 points there that you're seeing on the Nifty mid cap index. But let's look at who are the gainers and the contributors to this list. In fact, who are really helping the markets in this position. We are seeing Tata Motors, which was, remember, among your biggest losers, while we saw this kind of drubbing right from Friday, where after those auto sale numbers that came in, Tata Motors had seen quite a bit of selling pressure there. Now it's among your top gainers, almost 3% of gain coming in for Tata Motors. ONGC on the back of its earnings that have come in, and we'll be discussing that in detail, as well as Maruti Suzuki from the auto pack that you're seeing among your top Nifty gainers. Let's also look at the other ones that are contributing towards this gain. There's L&T, there's also Adani Ports, as well as Tata Steel. And in fact, a lot of your queries that were coming in on Tata Steel in particular, we'll get Brijesh to answer that, but also others from the metal pack. You're seeing the likes of an Hindalco, as well as NTPC from the power point, as well as M&M from your auto segment. So a couple of auto names that we saw there, right from Tata Motors to Maruti, as well as M&M among your gainers, as well as a couple of metal names, the ones that really saw that drubbing, perhaps those lows being an opportunity to buy, and where you're seeing these ones among your gainers. Let's also look at the flip side. You're seeing the likes of an Apollo Hospital, as well as SBI Life, that are among your laggards in trade at this point. But let's get discussing more stocks with Brijesh. Let's particularly, since we're talking about the metal pack and how that one was really down and about yesterday, there are a lot of queries coming in for Tata Steel in particular. Also today it is among your top gainers. But how would you look at the metal index, as well as the do you have a pecking order of stocks among them, and what are the charts really suggesting for Tata Steel?
Yeah, so I think metal was one space where the structure was positive, and with the recent correction, what we are seeing in Tata Steel, I think it has met with the support level, very decent support level, 150 level. It's a very good trade setup where we have a very good risk reward ratio. I think one can easily take the long trades, even though in cash, I think it's a very good level to take a entry because the recent rate for the Tata Motors was 180, 175, 180. So anytime when the market stables and the market says like there is a bounce back, Tata Steel has a very good opportunity to bounce back to 170, 175. It's a very good trade setup. I think one should have a little bit of aggressive view and should go long in Tata Steel.
Right, so you can go long. I hope that answers Abhishek's query because he was asking on Tata Steel. So there is opportunity to actually go long in this particular one. Brijesh, do stay on with us and we'll try and answer a couple more queries in just a bit. But let me also get our viewers up to speed with all the stocks that are abuzz today. Now, Bharti Airtel came out with its numbers yesterday where the profits have jumped by a good 100%, we would say, coming in at 4,160 crore rupees versus the 2,071 crore rupees. Revenues too have grown by about almost close to 2.5% at 38,506 crore versus the 37,599 crore. EBITDA has risen just marginally by about 1.8%, 19,944 crore rupees is where you're seeing that number, whereas the margins have dropped slightly by a couple of basis points, or 1% rather, we would say, from 51.8% versus the 52.1%. So a few basis points there that you're seeing drop in the EBITDA. But if you look at the ARPU, that one has seen a good increase of about 2 rupees. So 211 is where the average revenue per user you're seeing versus the 209. And they've also put an exceptional gain this time around of 735 crore rupees versus the loss of about 2,455 crore rupees. Now, of course, there are a couple of brokerages that have come out with their calls. Citibank has a buy call with a target of 1,750 per share for Bharti Airtel. They do say that the Q1 numbers, at least the India mobile business, the performance has been in line. They're seeing the revenue as well as EBITDA both at about 2% odd on a quarter-on-quarter basis, which is slightly below what they were estimating, but also a miss in their Africa business, which perhaps has gone on to dent these numbers. Now, the India capex, though, shows good signs of moderation as well as consistent without the and as well as the management commentary that has come in seems to really help that counter. You're seeing those good gains there for Bharti Airtel. It is positive. Macquarie too has a neutral call with a target of 1,280 rupees per share. They say that the consolidated EBITDA is up by if you see just about 12% on a YOY basis, which could be a mild miss, although the consolidated profit after tax has beat by that one-time exceptional item that you saw. In view of this strong stock outperformance, because remember, Bharti Airtel has been among your top gainers and has hit new highs, for the past few months. That has always been, hitting that 52-week high or new fresh highs that we're seeing for this particular counter. So which is quite interesting to see how it has gone on to perform. You also had Bharti Hexacom come out with its numbers, and now Hexacom is interesting to see because remember, they were the ones that also put in their bids for the spectrum auction this time around, and everyone was quite inquisitive to know what really is the purpose behind it. But their profits have jumped up by about 130%, coming in at 511 crore rupees. Revenues have grown by 2.3% at 1,910 crores, whereas EBITDA has fallen for them by about 0.25% at 911. Margins too have dropped just about few basis points to 47.7 versus the 48.9%. They too have shown an exceptional gain this time around of 318 crore rupees, which is interesting to see how Bharti Hexacom goes on to perform. But let me get in also Brijesh and his view on the likes of Bharti Airtel as well as Bharti Hexacom. What are you looking at that, what really stands out, not just in terms of their numbers, but also for the fact that this stock has been quite interesting and has been hitting those new fresh highs every other week in the past few months, we would say. So how are the charts really looking for both of these counters?
So if we start with Bharti Hexacom, so there has been slightly at the level of 1150 to 100, there is a slightly distribution. So the charts are not that strong for the Bharti Hexacom. There can be further profit booking in the counter, and somewhere close to 1050, 1070 is what I look at the current level. So slightly distribution is there. So one has to be cautious. So I won't be taking any long trades. If you're having a position, I think once we need to keep a watch, and if by any chance 1050 mark is taken down, then there can be further correction in the market. So have a slightly cautious view on the Bharti Hexacom. Coming to Bharti Airtel, so I think the view is positive. Directionally, the trend is positive. Right now, the charts are quite sideways. But the level of 1450 is something where it has got a very good demand zone. So I believe whenever we see this opportunity, we should be taking a long trade, and slowly and steadily it will take a good amount of time, but then I believe over a period of time, when the market settles and we are in the uptrend, the Bharti can be back to 1600 level. So this will be a more of a positional bet rather than a trading opportunity. Closer to 1450, there can be opportunity to go long in Bharti Airtel.
Right, so there might be opportunities in Bharti Airtel, not so much for Hexacom at this point. But Brijesh, let's get a couple of more queries answered them. There is a query coming in from Kishore. He wants to know your view on Devyani International at the current price. What would you suggest? Buy, sell or hold if he wants to enter? Is there an entry point for him?
We are having a buy trade setup in the Devyani International. So this stock has not corrected with the market, and it is pretty much trading about the value of its short and medium term moving average. In the near term, we can see this counter going back to 220, 225 level. It will take a little bit of time, but it is a strong counter. So somebody wants to take a position can also play for that another 50 points move from the current levels. The bias remains positive. So it's a strong bet.
Right, so there is a buy call for Devyani International. I hope that answers the query. Another one here from Balaji, and he wants to know your view on Amara Raja batteries as well as general insurance stocks. So first, let's take up Amara Raja. I'm seeing it is up by about almost 2.5% right now. What would you suggest for the likes of an Amara Raja?
Yeah, so specifically Amara Raja batting, there has been a profit booking from the recent high of 1750 mark. So there is slightly distribution. If somebody is making profit, I think one should take that call, because once if the stock slips below 1500 level, then there will be a further correction close to another 100, 150 points. So I think if somebody is making money, just take this opportunity to take the exit and wait for decline, because on a larger degree there has been profit booking. So that pressure will be there during the next couple of days. So I believe any time, even this current level can be viewed as an exit opportunity, and be very cautious if 1500 levels are broken. If those levels are broken, then definitely there will be a further damage to this particular stock. So cautious view, 1500 would be the immediate base and strong support zone. And overall on the insurance pack, I think we are extremely bullish. This sector is going to perform over the coming months. So I think whenever, like yesterday, even when the market corrected, we didn't get too much of stocks to make the re-entry. I think we can have the position at current price as well. I think slow and steady this sector on a whole look positive.
Right, so that's the view there. Another one that I'll quickly try and pull in here. Pradeep wants to know your view on Asian Paints and how is that looking? Because, if you're looking at consumer discretionary as well as staples, everyone's looking at the defensive now being that outlier and who has really helped people in at least their portfolios while we're seeing these kind of sell-offs that happen now and then. The FMCG pack or even consumer discretionaries are the ones that really are being the savior. Would you have the similar view that it's time to be looking at these FMCG stocks at least with a long-term perspective, and your particular view on Asian Paints?
So Asian Paints, after the con call, the management was not so strong talking about the numbers. But then on this from the charts perspective, it has scaled about 3100 level. So this was the resistance zone. Even though when yesterday in the last 3 4 days when the market was correcting, Asian Paint was holding strong. So purely from the data point of view, 31,000 3,100 level, there were the call writers who exited their short positions. So from maybe since there will be some short covering, I believe the next level for the Asian Paints is 3,300. So another 200 points move. So somewhere I think that move might come in the Asian Paints purely from the data point of view. And structurally, the stock, if I see those 200 points kind of a move, I will take some profit. I will do some profit booking. On the way down, 3,000 is a very strong base. So as long as the stock is above 3,000 mark, one can hold the long positions. If by any chance, if there is a correction and 3,000 levels are broken, then one has to be highly, extremely cautious.
Right. To wait on, let me also mention a couple of other stocks that are buzz. ONGC, we saw among the gainers today in trade. That's after its standalone profits have fallen by about 9.4%, coming in at 8,938 crore rupees on a quarter-on-quarter basis. The revenues too have grown just by about 1.8% to 35,266 crore rupees. On a YOY basis, if you see, the decline in profits is about 15%. Whereas the revenue has risen, if you look at the YOY basis, the revenue has risen by about 4.3% at 35,266 crore rupees. Jefferies is going on to have a buy call on ONGC. They've put their target at around 390 rupees per share. They do look at the Q1 standalone EBITDA of just about 3%, is slightly ahead of its estimates, and which is why they are also positive about the Q1 domestic production, which is pretty much come in line. They do see the realizations, though, have been slightly ahead of expectations, and that premium price on realizations from the new wells that they are looking to drill, those ones in the nomination field keys are something that you need to be watching out for, at least when it comes to ONGC. That stock also seeing some good positive momentum. Now, besides this, there's also a lot of action that's happening within the pharma space. Now, yesterday, of course, it was all sectors in the red, and which is why we couldn't pinpoint anyone in particular. But if I have to look at the pharma space, that one has been quite interesting. Now, there is news flow coming in for the likes of a Lupin, wherein they are going to be incorporating Lupin Sri Lanka, which is a private limited company, into its wholly owned subsidiary. They've also in other news, received a show cause notice from the Maharashtra GST department, where the GST department is seeking to recover close to 672.4 crore rupees worth of taxes. Now, this show cause notice has been issued for the period of July 2017 to March 2022. It will be interesting to see how they respond to this one, but that's what we're getting from Lupin within the pharma pack. Brijesh, would you want to come in and speak on the overall pharma sector, and even the pharma index for that matter has been seeing some interesting swings, not just based on the earnings that are trickling in, but do you think there is opportunity within the pharma space, and any particular picks that you have within this?
Yeah, definitely. There are multiple stocks which are looking positive in pharma. For example, the Torrent Pharma is looking positive on chart, both from the technical derivatives point of view. Lupin and Sun Pharma is something which has been outperforming during this recent market rally. So I think so. This is basically uptrend kind of a stock. So I think this is going to be the move for it is for this series, this August series. So Divi's Lab, Torrent Pharma, Sun Pharma, Lupin, these are the stocks which are also from the frontline basket. So I believe this stock is likely to perform irrespective of the market condition. So we'll be definitely having a positive bias for this particular stock.
Right. So that's the view there. Within the pharma space, the likes of a Sun Pharma definitely looks interesting, according to Brijesh. Brijesh, a few more queries that you could answer perhaps. There is Amara Raja who wants to know your view on IRFC. What would you suggest to him, or rather, what are the charts really showing for this one? At least in the run up to the budget, we saw quite a bit of action in these railway stocks. But IRFC, what would you suggest?
It's about the IRFC, right?
Yes.
I think IRFC at 183 level is a decent level to look into. Maybe not too aggressive, but then the range for the IRFC is somewhere closer to 170 to 180. This is the band where I believe it has got a very good amount of support demand zone. So slightly, we cannot exactly make out whether it would come close to 170 level, but then this range is what I believe should be used as a buying opportunity. At this level also, maybe one can look to add long positions because the directional trend for the stock is positive. So I believe 220, which was 230, which was the recent high, can be retested at any time. So I would be taking positions closer to 180 to 175. This would be the band, and the I think I will be cautious only when I see 150 levels being broken on the closing basis. So, but then I don't see that happening very soon. One can use this current dip as a buying opportunity.
Right, so you can use those as buying opportunities. There's another query coming in from Alex. He wants to know your view on GNFC, and I would perhaps ask you to dive a little more, but on fertilizer stocks, because a couple of them are also in your FNO ban list, the likes of Chambal Fertilizers as well as GNFC. So, how would you suggest one really trade in these stocks and GNFC in particular?
GNFC, there is a loss of momentum and there has been a profit booking, and the stock is also trading below the values of their short and medium term moving averages. 640 is a very immediate support. I believe the structure is negative. Sooner or later, the 640 level might get broken. So, and there are fair chances that this can come back to the 600 mark. So that is the base where it can come back to. So it has structurally, it's a negative bias. A bounce back should be viewed as a buying as an exit opportunity. Maximum bounce as of now would be 680 to 690 level. So be cautious. Whenever it comes closer to 600 mark, then we can review it.
Right, so you can look at the 600 levels and then review your call on the likes of a GNFC. Now, interestingly, we did speak about insurance companies, and there was a query coming in, but there is a brokerage call from HSBC on LIC housing finance, and I'm talking about housing finance companies and not just insurance, because they do have an arm even there. But this time it is a downgrade from HSBC for the likes of an LIC housing finance. They have reduced the target and cut that target price to about 590 versus the 740 rupees per share. They say that the company continues to deliver below system loans, as well as growth and margins have seen a lot of compression. They believe management guidance, even though is optimistic, competition would keep that loan growth as well as the net interest margin number under pressure. They are looking at an estimate of about 5% of earnings per share, the CAGR over FY24 to 27. So that downgrade call coming in there from HSBC to LIC housing finance. But let me also ask Brijesh on, because we are in this, we are going to hear from the RBI governor in 2 days from now. But, rate sensitives, is there a reason to be looking at them? Could the RBI actually surprise us and not go the same way as the Fed? Because, in this whole sell-off that we are seeing, there was the chorus of off-cycle kind of rate cut from the Fed was something that was heard here and there. Could the RBI also, given our situation here, want to do something like that? And do you think that rate cut here is something that we're likely to see in this calendar year at least?
See, our analysts believe that the rate cut might be seen only after the month of October, the series. So, at this very current moment, we don't believe that there will be a rate cut. So, it will take another quarter to see. So, maybe in the next possible policy, there can be some scenarios of rate cut. On an immediate basis, we don't believe that there could be a rate cut from our side, is what our banking analyst has a view.
Right, but in terms of stocks that really get impacted because of this, the rate sensitives, would you prefer the bank and financials names, or would you like the, something like a realty that also gets impacted, or an auto? Which would be the sectors you would want to pick if there is some kind of change?
So we'll be having a slightly cautious view because the directional trend on the market is still not very clear, because there are fair chances that we might again see some sell-off from the higher level. So we would be taking a pause and we will be waiting for some more corrections to see. Maybe there are chances in the coming days, Nifty might break 24,000. And whenever if Bank Nifty breaks 50,000, there will be a little bit more carnage can be there. So we are having a wait and watch kind of a strategy. So we'll just take a breather. So we won't be betting anything right now.
Right. So Brijesh would rather take a breather and wait for all of these things to settle down, see those levels there within the Bank Nifty, and if it manages, to be around those 50,000 levels, and then take a call. Brijesh, quickly, two queries that I'm going to pull in, and then perhaps you can tell us if there are any specific stocks that are on your radar and why so. Let me get your view for Ashu. She wants to know your view on Muthoot MF and what the stock really is suggesting, and the other one coming in on Birlasoft, because that is another counter that has seen some interesting swings in the past. So Muthoot MF as well as Birlasoft, what are the charts really saying for these two?
So to start with Muthoot, I think numbers are there. I think numbers might come little bit quite strong. So we have a view that in the near term this can go back to 1950, 2000 mark. So the view remains positive for the Muthoot Finance. There is no, and the recent low of 1800 can be the immediate stop loss where we can take the that can be the protective level to keep a watch on the downside. Coming to Birlasoft, there has been a good amount of damage, and only what I can see, 550 is the level where previously the stock took support and then it has seen a rally. So now again it is back to the support. If somebody was to take the risk, then 550 will be the stop loss, and with that risk reward ratio, if somebody wants to take a call, one can look to add the long position, but technically the structure is weak. So if somebody is stuck, should take the position. A fresh position should not be made in the Birlasoft, is what I believe at this point of time.
Right. So no fresh positions that you're seeing currently for Birlasoft at least. Brijesh, anything particular that you have on your radar? Any stocks that you would like to recommend for our viewers, given this kind of environment that we are in? Anything that's on your radar?
There are three stocks which I would like to take a call. One, to start with, it is the BHEL. So this has been one of the outperformer, and this call is purely from the derivatives point of view. The level of 290 is a very strong base. There is a lot of put writers who are having the long positions. So I don't think this level of 290 will be broken on the downside. So, and on the way up, 320, 325 is a target. This would be for next 10-15 days kind of a time frame, but BHL is something which one has to keep a watch on. Exide at 500 level is pretty strong. This has been the demand zone. 480 was the precise level from where previously the Exide has started to move, and we had a recently very good trade setup for the Exide. And with the yesterday's correction, the stock is back to the demand. So with a very minimal stop loss of 480, one can take a long trade in Exide. And lastly, the Tata Motors. Tata Motors, the 1000 mark is a very strong demand zone. So even though yesterday when the market corrected, it has not broken 1000. So 1000 would be the stop loss. With that base, one should take the long trades in Tata Motors.
Right, so interesting picks there. BHEL, Exide as well as Tata Motors is what Brijesh has picked for us. But we're completely out of time. So let me thank Brijesh Ail from IDBI Capital for joining us this morning, helping our viewers with their queries, as well as giving us some kind of, idea of which side the market is heading. Thanks so much, Brijesh, for your time. And for all our viewers who've tuned in, keep sending us your queries. We do have a couple of IPOs that are opening up today, subscriptions that are starting up today, which will be interesting to watch out for. Now you have Akums Drugs and Pharmaceuticals, which is going to list on the bourses today. So that is something that you will want to keep your eye out for. There's also Unicommerce Solution. This is the SaaS-based company that is backed by also the likes of a Snapdeal. This one will be opening for subscription. Ola Electric, that one will be closing for subscription today. And remember, they were already, the retail segments were already fully subscribed in, this the first 2 days of the IPO opening. You also have the likes of First Cry. This, remember, is a 4,193 crore rupee worth of IPO that will be opening today. The price band somewhere around 440 to 465 rupees per share for First Cry. This IPO. So a lot of action happening within the primary market space also that, you can be looking out for or see opportunities in. These are the ones, the First Cry ones will close on August 8th, in fact. So today is when it's opening till up to August 8th is when you can be looking at this particular IPO, and we'll be getting those managements as well to be, commenting on how they're looking to be using these IPO proceeds and the likes, from here on. But for now, we're completely out of time. So I'd like to thank all of you for tuning in and sending us your queries. We'll try. Don't be disheartened if we've not been able to take them up. We will get our experts to answer them as and when you do put them on our live feed. But for now, it's a thank you and goodbye from the whole team that puts this together. Thanks so much for tuning in. I'll be back tomorrow.